Hi, I'm Reid Cramer. I direct the asset building program here at the New America Foundation, and we've just had a panel discussion on fixing the mortgage mess. I'm here with Julia Gordon, who's a staff attorney at the Center for Responsible Lending. Fabulous organization, has done great work. And essentially, we know we've got a foreclosure crisis and a mortgage mess now that is still unresolved. It's causing a lot of hardship across the country. You've thought a lot about some of the solutions to getting us out of this mess going forward, and I'm wondering if you could identify what some of the organizing principles should be when we think about policy solutions.
Well, what we've learned in the past 4 years of what I would call largely failed initiatives is that any solution has to be mandatory, has to be required action by the mortgage servicer. It has to be industry-wide, meaning you can't just pick one actor, it's got to go across the whole industry. And there has to be some element of control for the homeowner, so that the homeowner is not just at the mercy of what the servicer decides to do or not to do. And in many cases that may mean involving some kind of third-party interest in the discussion.
Right, so it can't be piecemeal at this point. The issues are so large, we need to kind of cut across. Something that you mentioned earlier that we've talked about is bankruptcy reform. This is a potential tool that I think could be deployed. How would that work? What would be entailed?
Well, our bankruptcy system is designed for problems like this, when debt goes bad and you have to restructure it.
Right.
And every major institution in this country that's been touched by this financial crisis has had access to the system, and many have used it. Lehman Brothers used the bankruptcy system. Virtually every failed subprime mortgage lender has used the bankruptcy system. The only folks to whom that solution is not available are regular, ordinary Americans who own the home that they live in, because the only mortgage that you can't restructure in bankruptcy is the one on your primary residence. Ironic, isn't it?
Right. And, you know, we've referred to this previously as cram down, where you're able to revisit the mortgage, kind of set a new deal, and do it in the context of a court proceeding. Could this be done at the state, local level, at the federal government? What would be some of the policy levers that could be used to kind of get us farther along in this direction?
Well, what we really need to do is we need to fix these mortgages to the best that we can, because foreclosures, everybody loses. That's clear. So in many cases, what we need to do is restructure the payments, make the payments more affordable for people who may have lost some income, maybe working reduced hours and the like. But in many cases, especially for folks who owe a lot more on their mortgage than their home is currently worth, what you need to do is right-size that mortgage. And in many cases, that will require the owner of the loan, whether it's an investor or a bank, forgiving some part of that mortgage, writing that down as a loss, and making that mortgage match better the current market value. And so there are a variety of ways to do that. A servicer can do that voluntarily.
Right.
There are a lot of obstacles to that, and the reason we think that bankruptcy court is the appropriate place to do that is because the bankruptcy judge has this whole panoply of powers that's necessary to do it. They're able to, you know, I think of this problem as something of a Gordian knot, and the only one that has that sword is the bankruptcy court. They can just cut through it. They don't have to sit around and untangle this and untangle that. They can deal with what has become the very vexing issue of second liens on many of these mortgages. The second liens in many cases are actually held by the same banks that are servicing the securitized first liens. Bankruptcy can deal with the fact that many consumers just have too much consumer debt overall, whether it's credit cards, student loan debt, medical debt, and the like. It can deal with the fact that many servicers are afraid to act because they're concerned that anything they do may impact one category of investors differently from another category, and they might end up getting sued. The bankruptcy judge doesn't have to worry about that.
Right.
Another good thing about bankruptcy is that bankruptcy is initiated by the homeowner. You don't have to wait in line for your servicer to get around to answering your phone and get shuttled through 30 different people until someone finally deals with you. And best of all, the bankruptcy judge is that third party, that disinterested third party who can bring everyone to the table and make it happen.
Right, it can cut a better deal. I think it's actually a very promising route. I hope it gets a lot more attention in the next year in the new Congress as a way of dealing with some of the issues of foreclosure that are really affecting so many households and communities. Thanks, Julia, for your time. And a lot of her writing is available on the Center for Responsible Lending's website, a real valuable resource. So keep up the good work.
That's responsiblelending.org.
Responsible Lending. There we go.
Thanks so much for having me.
Yeah, appreciate it.